to all of you. Thanks a lot for being here. We'll be talking about debt, toxic debt, useful debt. Where should we establish the framework? So we can hear the people in Vervetten. I'm Pascal Richer. I'm a journalist at Le Monde. So this theme, toxic debt, useful debt, this is a recurring theme because debt is all about financing the economy, the fuel of the economy. But debt is poorly perceived. In German, Schuld, debt means guilt. So we consider that debt is like cholesterol. You have good cholesterol, bad cholesterol. There's a good debt and a bad debt. A good debt financing the future that could be redeemed. Bad debt is the debt that funds obsolete models or goods that are losing value. In order to address debt, private debt and public debt, we have prominent panelists, prestigious speakers and panelists who are very familiar with the topic. So I will introduce the coordinator of this session, Olivier Garnier, the former governor of the Banque de France and the senior fellow at the Institut Montaigne. You have Serge Magdalene to his left, chief executive officer of LCL, Crédit Lyonnais, and he spent his career at Crédit Agricole, and he is our banker, so he will introduce the topic. Patricia Barbizet to his left. She is VC of LAFEB, the French Association of Private Companies. She represents the big corporations, and for quite a long time she'd been working with Artemis, the holding company of François Pinault, and she was the assistant of François Pinault. Then Christian Mumsen is with us. He will be talking in English, so you have some headsets. So Christian Munsen is the director in charge of strategy, policy and evaluation at the International Monetary Fund. Then Bertrand Rambaud, chief executive officer of Ciparex. This is investment capital based in Lyon, and he's been using a debt in order to do some leverage buyout, and he will be talking about that. And then Benoît Tassou, head of Partner Networks France, Executive Committee, Amundi Asset Management, so invests in debt.
So I'm going to invite Olivier Garnier to introduce this talk. Good morning, ladies and gentlemen. So a couple of words just to talk about the debate which we're going to be talking about, public debt, how to distinguish good from bad. So it is obvious that financial needs are absolutely vital. Finance is fundamental. We need to decarbonize, numerize, and we need it for defense, etc. There's a report in Europe which had identified that Europe needed 800 billion. That's 5% of the European Union's GDP. When we're looking what's happening in defense today, and with AI, this figure is going to be even higher in the future. So for extra debt to cover these needs does not become harmful. I think the question is not so much that of the quality of the debt, but of its volume, and also who's providing it and how it's being financed as well. So who is financing? The first question, which we're going to be talking about today, is that of public versus private funding. As far as France is concerned, we know that today room for maneuver, the budgetary space, hardly exists anymore. So there's something which is quite fashionable today. That is to say, perhaps we need some segregation when we're calculating deficits or when we're producing bonds to fund defense. Some expenditure in the public field has to respect some golden rules, i.e. you can authorize rules to borrow only to finance defense. But if you take a look at France and you take a look at national investment, you've got a deficit which is quite high, which is lower obviously than the 5.1% in 2025 for French government. but it's much higher than the 3%, which is the necessary minimum for stabilizing the debt ratio compared to GDP. So, in other words, this means that good debt might be emitted by a bad emitter, that remains a bad debt. So there's the Gresham law, which says that poor money chases good money, and it can be the same in terms of debts. And a good debt, as it grows, it becomes harmful in the end. So there's also the question of how you finance. We're going to be talking about that in a minute. As I said, I think the private field will be a source of finance, but we've got bank debt compared to non-bank debt. We've seen over recent years a bit of an increase in a private credit, and that begs quite a few questions. Some central bankers have got quite a lot of questions about stability, but in the United States, these debts are being covered by individual financiers who cannot necessarily bear the duration of investment which is needed. So that balance between assets and expenses is a bit off kilter. So over the past 10 years, most funding comes from debt by businesses in the United States, for example. Over 10 years, if you look at the businesses were buying back their own shares, but today what we see, you see, what's going on in the United States. The question which is for our panel today is, are we not at the end of a cycle in terms of credit and debt? And are we not heading back to funding via your own capital, a business's own capital? And of course, we've got share valuations which are very high at the moment. It's difficult to issue shares at the moment, but it's a real question of the return of shares, the stock market. Well, thank you very much for that, Olivier. We're going to keep 10 minutes at the end of our different presentations for a discussion with the room. So, Serge Magdalene, first of all, you are the banker on the panel, the lender on our panel. So, as of when does a debt become toxic? Well, thank you. Good morning, everyone. I'm always struck to see that the word debt always has a negative connotation, whereas credit has a positive aura about it. But they're two faces of the same activity, which is funding. So the etymology of debt is the verb which means to have an obligation, i.e. something negative, whereas credit, from the verb credere, means to place your trust in something. So I believe that all debt debt is never toxic if you believe that it's going to be reimbursed by the borrower, independent of the level or the context, etc. As long as you believe it's going to be reimbursed. But quantity is important. Well, as long as you have faith that it's going to be reimbursed, I maintain that a debt cannot be toxic. This is a question which is facing us for the next few years because apart from what Olivier's just mentioned, we need huge amounts of financing over coming years because we're seeing an end of multilateralism. What's the relationship between multilateralism and debt? At the end, we've unpicked all of those stability mechanisms, OMC, UNESCO, European Union, and President Trump has put an end to multilateralism by replacing these multilateral leads that we were used to the era of the deal, a bilateral deal, whereas there might be one or two winners and a whole host of losers. So sovereignty is a huge question in terms of the military, AI, food, etc. So we need a kind of funding to restore sovereignty. Second factor is decarbonation. We're in a heat wave here for a week, and we know that we have to decarbonate very, very quickly. CO2 management needs a lot of investment. It needs to happen now. And if we invest now, we're going to see the results 10 years down the line. We need some different type of investment to adapt our homes, our industrial processes, our infrastructures. So we need a lot of funding there. And the third factor is AI. I am convinced that AI is the fifth industrial revolution after coal and then oil and then combustion engines and then nuclear energy. We're arriving at the fifth. So it's the fifth industrial revolution here, and we need to adapt all of our industrial equipment so that we can construct high-intensity data centers and a whole realm of other things. And how do you fund all of this? Yes, how do we fund all of this? Given that we all agree that public debt is at the edge of its sustainability, so we're going to need private debt. That's 75% of bank debt. And the Crédit Lyonnais is one of the players and is going to shoulder its responsibility. We inject 100 million euros per day into the French economy in terms of financing. And I want to underscore here the incongruousness of political decisions which are off the radar. These are the prudential rules. Prudential rules were invented by the Americans after their financial crisis, which they triggered to protect themselves from future crises. Not only the Americans. It's all central banks. No, but it was the Americans who were behind it. And here in Europe, we apply those rules. There was a decision taken by Europe which increases by 13% the reinforcement of a European bank's own capital. That means that because of this decision, European banks have been deprived of 2,000 billion of funding. Yes, but you could see that as a precautionary measure against toxic debt. Yeah, the European banks are being deprived of things. On the other side of the Atlantic, Trump has said the opposite. He said 5% is the level for banks to have to release billions of money for the American banks. So with these decisions, we are creating a gap in financial sovereignty of billions of euros. And I would wrap up. Oops, I've got to wrap up now. Oh, the problem comes from Trump, therefore, who is not respecting these financial rules. If everybody was respecting the rules, there wouldn't be such a problem. So we've got competition between banks, which is leveling down to the base, and that is rather dangerous for financial stability. Well, are European banks solvable? Yes, they are solvable. But they are being deprived of money to invest in the economy. It's a question of trust. We need trust. And Le Cornu, the French Prime Minister, said yesterday that he thinks that having a budget in 2027 in France is essential, and I really agree with him on that. But I think we need more than that. We need to have a French business plan for 2032, which gives us a plan for the next 5 years with stability, tax stability, so that France can be developed. And I believe that it's absolutely vital if we hope to restore trust in the reimbursement of any debt, whether it's public or private. We need to have this French business plan for 2032. Thank you, Serge. Patricia, now, I've got a question for you. You represent major companies here. Are big companies counting on states to fund all of these needs we've just mentioned? Decarbonation, energy transition, but also defense. There are a lot of defense needs today, and digitization. So rather than investing deeply in these sectors, are businesses not just relying on the state to do that? No, the businesses are relying on their own selves. The question is debt toxic or not? It's toxic when it's funding the past, but it's very useful when it's funding the future, i.e. needs in investment. That's when you fund new needs, you'll have real growth, and that is so crucial for our countries. And it's the mother of all battles, if you like. We need to have growth. We do not want to stagnate. Olivier said that needs are ginormous. The climate transition, defense, innovation, digital technologies, reindustrialization, because that too is a real hot topic. All of these topics here need to be carried out fully, deeply, and that is going to necessitate tens of billions of euros. If we hope to remain at net zero, 340 billion is what we're going to have to invest. Army, defense, technology, hundreds of billions again for those two subjects. And it's all very true. And the big players in the digital field are fighting each other. They can invest very heavily, and we have to be able to invest also. So that means of these three transitions, that's a total of about 800 billion of investment per year. So if France and Europe want to stay in the race, they are going to have to invest more and better and quickly and deeply. So we're going to have a huge, we need a lot of money. And the state can't do it all. And it's not that you can't oppose public and final funding, but what we really need at the end of the day is enough money to fund all of this investing. And we need an investment continuum. We need private funds to absorb risk. We need profits to self-finance investment. If you're investing but losing money all the time, that won't work. We need bank credit, a lot of that. We need capital markets. They need to be deeper, they need to be agile, and they need to be limited by as few rules as possible, as few constraints as possible. And we also, from time to time, need a public intervention. We need guarantees and interventions when the investment horizon is beyond that which a business can cope with. So what's the situation today? I think the French Prime Minister said this yesterday. We don't really have enough margin for maneuver. However, debt is useful. Public debt is useful when it funds public infrastructures on the long term. Research, infrastructures, energy, defense, training, and education. The public authorities really have to take care of that. So yes, we need a lot of that today. So might one not imagine that we should increase public debt and then stabilize it later? Well, I'm sure we're going to have to increase it, but we're going to have to finance it differently. On the other hand, if we fund everyday expenditure, then that's going to be a catastrophe for the country, and that's what the budget's doing right now. So we need to have more balanced management. A state mantra is to finance growth. More public debt is dangerous, and it may not be reimbursed. We're lucky. We have a very solid financial system here in France. We have the foundations which are solid. We've got some strong institutions which have a long-term view and can work with us over time. We've got a lot of expertise in terms of projects in the private sector. So it's cooperation that we need between these sectors. We must not set up too many regulatory hurdles. We need to be able to have public-private partnerships. We've known that in the past. We need them again now. And in the future, we're going to need more of them. And the measures that we're seeing today in the finance law with the high tax levels, etc., that's not the way to go. We really need to work all together, roll up our sleeves, so that we can trigger all of these factors that we need. We need to get them up and running. The first is Europe. We need to get European savings on board. I'm not the first person to say this. Since the Draghi report, since different reports, we're explaining to the French that there's a lot of people saving in France and in Europe, and those savings going off to the United States, and they'll only come back to to Europe when the Americans buy out our companies. So this is a phenomenon which is a huge subject of debate. So rather than enabling France and Europe to produce more, we are sending our money out to the funds in the United States, and they come back and buy our companies out. We have to stop that. The second thing is we have to improve the tax regulations for companies. Companies are being prevented from triggering profit, because profit is what allows everyone to invest. So we really need a tax regulation, and we need a framework which is fostering investment. We need to be able to scale up investment. And in Europe, we need to make it easier to concentrate. We've been too strict in the past. I think we've wanted to prevent huge concentrations being constructed in the past, but we're going to have to change that optic. There are some private players which need to become involved. That does not mean that the state doesn't have a role to play, a key role to play. Their role has to be clearer. The state can't do everything and shouldn't be doing everything. But we need to clarify what the state's role is in our economy. And the state has to start by stabilising public finance. Otherwise, it is taking all financial opportunities to the detriment of everyone else. But it's not positive. So toxic debt funds inertia and it undermines growth. A healthy debt, which is well mastered in its goals and in the amount of money which is collected, reinforces our sovereignty, and that's what we need to be aiming for. So we have to have the right regulations which make all of this possible. We have to share risk, of course, when we're talking about infrastructures. Nobody, neither state nor us, can do it on our own. You cannot stand in for the companies, you have to help them, you have to share risk with them because they can't cover all of the risk. And that would mean that the state can then focus on its missions, which is the rule of law, training and education, fundamental research, and state responsibilities. So it's really important that the state does what it needs to do and becomes a major player. Thank you very much, Patricia. So it's a strategic debate. It's not a moral question. We have to find these right strategies. Let's move on to Christian Munson now from the IMF. I've talked about your services with you when we were preparing a roundtable, and you said, well, as far as we're concerned, at the IMF, the problem of a debt, toxic or healthy debt is not really the issue. It's the question really is now we don't have any room for maneuver for the state. So the problem is finding funding. So do you confirm this? It's no longer a question. It's really important for the IMF to make that difference between toxic and non-toxic funds. It's not really the issue anymore?
Merci beaucoup.
Oui, Christian a vécu à Bruxelles, donc il parle un peu français.
Christian did live in Brussels. He does speak a bit of French, but if you allow me, I am going to speak in English. It's much easier for me to be precise.
So I think the fundamental question today really is, what does it take to make public finances sustainable in a rapidly changing world? So let me sort of take that question in three parts. First one is, what is happening globally to public debt? Secondly, why do we worry about it going forward? And thirdly, what is the IMF recommending for making good choices in this regard? So on the first one, it's actually quite an interesting picture globally, not just in France. So public debt is historically high and rising. In 2019, just before the COVID pandemic, public debt was 82% of GDP. Today it is 94% of GDP. And we project that public debt globally will be exactly 100% of GDP by 2029. So this is a very rapid increase. This increase is driven very much by major economies, including US and China. And it reflects several factors. One factor is a succession of large shocks, the COVID pandemic, the supply shocks after the Russian war in Ukraine and the most recent war in the Middle East. Secondly, relatively slow growth and slow growth prospects in many advanced economies, especially in Europe. And thirdly, limited progress on fiscal consolidation after COVID. So as a result, budget deficits remain on average too high for bringing down debt ratios globally. The average budget deficit in the world is 5% of GDP. Again, it is higher in the US and in China, where it is between 7 and 8% of GDP, and it is lower in the euro area, where it is 3% of GDP. So the second point is, why do we really care about that? And I think the key reason is that on the one hand, the higher levels of debt mean that fiscal space has narrowed, so there's less room for maneuver, as you've said. And at the same time, pressures on public finances are actually rising. Why is that? One, we live in a world where we can expect shocks to be more frequent than in the past, including supply shocks, which are very difficult to deal with for policymakers, especially central banks. Secondly, the average level of interest rate is much higher than it used to be in the 2010s. And that means that actually public interest bills have risen from an average of 2% of GDP to 3% of GDP. And this is just in a short number of years, since 2020. And then thirdly, we have major transformations ongoing, and you have already mentioned a number of them. One that wasn't mentioned yet is demographic change. So this is particularly important for advanced countries where you have large pension systems and large health systems. Secondly, we have the climate transition and the energy transition, which are definitely a consideration for public policymakers. Thirdly, already alluded to, geoeconomic fragmentation, which has both an impact on trade, but also an impact on the need for security spending. And then lastly, there are major technological transformations going on. Now that's, in a sense, part good news, and I will come back to that, but it is certainly a transformation that public policy will have to deal with. So there's a real concern whether governments have the space to deal with these pressures, and therefore they have to strike a careful balance in every country. However, now I'm coming to my last point, which is what advice do we give? Well, first of all, no one size fits all.
La réponse à ma question arrive.
So finally, to answer your question, yes. So I think what we focus on is the quality and efficiency of public spending, which means targeting social objectives and longer-term growth objectives rather than broad-based fiscal support. This means public investment that has the potential for raising growth. It means targeting social support on the most vulnerable, and it means reforms of legacy pension and health systems. Secondly, in many countries, ensuring an efficient and strong revenue base is important, and there is a difference between countries. Many emerging markets and low-income countries, the task really is to raise revenues relative to GDP, while in advanced countries, it is more about making tax systems broad and supportive of growth. Another very important part is about credibility. Credibility of the medium-term fiscal frameworks. Why is that important? It is because private investors need to be reassured that public finances are sustainable, and that will help keeping the cost of borrowing down for governments. But then maybe the most important, and my last point, is that not everything can be solved with budget policies, with fiscal policies. Debt sustainability essentially has to do with debt divided by GDP over time. So it really depends on also the denominator, on GDP. So here the private sector really plays a crucial role. It is key for driving investment, innovation, productivity gains, and of course the private sector is also an important source of financing. So what is therefore important is that in addition to prudent fiscal policy, there have to be growth-oriented structural reforms in many countries. One is to support benefiting from the rapid technological progress, which requires attention to the infrastructure and energy and digital, attention to labor markets, education, etc. It also means that governments have a role to play to create a good investment climate. Some examples would be cutting red tape in emerging and low-income countries. Often the question is about governance, the rule of law, and then of course a well-functioning financial sector. So and it was already mentioned that mobilizing private finance will be critical in the European Union. Of course, you've heard about the Savings Investment Union. The IMF staff estimates that fully implementing the Savings Investment Union in Europe could raise European GDP by around 3% of GDP. So bottom line is there's no simple answer to your question. And the key is to recognize the limitations of public spending, which means keep your public finances in order and create an enabling environment for the private sector.
Thank you very much. Bon, si on a le temps tout à l'heure, je vous poserai, j'aimerais bien vous...
I will ask you another question. Maybe we should call off the debts of some countries in the south, the global south countries. We'll see that at a later stage. So Bertrand Rambaud, you are at the helm of Ciparex. You are the CEO of Ciparex. You are in the private equity business. And as part of your job, as I said earlier, LBO, so you borrow money, you buy back a company, and then you will redeem the money when the company is healthy again. There was a report that was issued at the French Parliament with Aurélie Trouvé and Emmanuel Mandon, and they criticized severely the industry of the LBO, leverage management buyout. And LBO, it's about people using debt in order to make money, but to redeem debts. The companies have to accept a high profitability rate and to curtail costs, etc. So this is a predatory behavior, so you have to defend yourself now. So what is your job all about? Is it all about toxic debt, harmful debt? Of course, I will answer your question. Good morning to all of you, ladies and gentlemen. You talked about the 3Ds, the major stakes and challenges of the economy, and I share all these approaches. And I will talk about transmission of companies, the letter T, transmission, something that we've been talking about for many years, and it's a huge challenge. And you've noted that recently the government has decided to put this topic back on the agenda. LBO, I'm not going to give you a lecture on LBO. So what is the use of LBO? It is one of the answers, one of the responses to make sure that companies can be transmitted, can be bequeathed. So LBO meets some needs, founding needs of the economy, and we have to take up the challenges that are ahead of us. And of course, they do not contradict with the major founding needs. So a report was issued 3 weeks ago, 1,000-page report, 800 pages of interviews, 300 pages. And of course, I'm a predator because in this report, I'm a little bit on the dock. If you look at this report, it is a shameful report because it is dogmatic and it is biased, it is not honest. And when you are an elected representative, of course, you have your views about the investment funds, but you have to report the different elements of the different interviews. This is what is absolutely pivotal in a democracy, even though it is not the topic of the day. So I think that this report is biased. And remember what our Prime Minister told us yesterday. And there are 3 sources of concern. The report on reversed economy. So this is an illustration of reverse economy. Of course, the report, was released by LFI, the left-wing party, but this report is for many people and targeted to young people. So it is not a true report. It is a false report. It doesn't reflect reality, and this is something that we need to say loud and clear. I'm not going to bombard you with figures. When you're under attack, you can defend yourself with quality figures, and I like figures, and things tell you a lot. What is LBO in France? 750 operations regarding a corporate transmission annually. You've said that debt is injected. That's true, but you have a lot of capital that is being injected, and this is the role of a private equity fund such as Ciparec. Out of these 750 operations, and we have the benefit of hindsight, 95% of rate of success, 5% of failure, but 95% of success rate. What does it mean, success rate? Operations that have been conducted properly, operations that have been sold with some capital gains, exceptional capital gains. But when I say 5% of failure, it means companies that have petered out. So as the President of the Commission said in the introductory report, I mean, it doesn't agree with the rapporteurs. I mean, we're talking about trains that are late. I mean, we can talk about those trains, but there were some excesses, as I will talk about them. But most of the time, things are going smoothly. Allow me to talk about employment. We do not destroy jobs. That's not true. So 2020. 310,000 jobs being created, 4% growth in the headcount between 2020 and 2024. So, in a nutshell, so you told me before the session, so the business has changed. It is more virtuous now than it was in the past. So without the LBOs, we wouldn't have managers or bosses who would become entrepreneurs. So you have lots of entrepreneurs. You have some executives that are shareholders. You have employees who are shareholders. We talked about the sharing of value through the LBOs. I mean, we can share value. Of course, I mean, I've been in this business for the past 30 years, and in the past 30 years, I've seen that operations have changed quite a lot, and I can tell you that there was an awareness-raising process from the private equity funds, from the entrepreneurs, from the banks, and they came up with some strategies that are more adapted, more tailored. Of course, there were some crises and there were excesses. I mean, I do acknowledge that, and there was debt toxic with the leverage effect when it is too high versus business models that necessitate big capitals in terms of investments. They can be volatile. Of course, I mean, there were excesses, but in most cases, I can tell you that the French funds, they invest in France and they are behaving well. And with the LBO, you can focus on sovereignty because you can keep companies in France domestically, something that we've been talking about that. It is one of the answers. It is not the response, but 50 participations of LBOs. So without these operations, I mean, these companies would be belonging to foreign companies. And the last point that I would like to highlight, things have changed. It is said, this is something that you said in your introduction. So the companies, they have to sustain the debts, they pay financial expenses. It's not totally exact or accurate, but at the end, who pays? The shareholder, because debts are being located in holding companies. If the operation goes smoothly, when you sell the company with the divestment products, I mean, you can redeem the debts and you can remunerate the shareholders. And if it doesn't go well, the shareholders won't be remunerated. So this is something that we need to bear in mind. I mean, there are lots of biased attitudes that are not accurate, even though we have to be cautious because we are dealing with a volatile economy. So thank you, Bertrand. Benoit Cassou from Amundi, you are an investor. I will ask you a question. Public debt, French public debt, is dangerous and we need to curtail it. But on the market, there's a huge appetite for French public debt. If you look at the spread with Germany, it is quite tenable. So at the end of the day, it is not really toxic, so there is some appetite for French public debt. Why is it the case? Or is it aversion to risks? People don't want to invest in private companies and they prefer investing in public debt. We are working with big insurance companies, pension funds or sovereign funds, and according to them, public debt, it is not a burden, it's a full-fledged class of assets, liquid assets. So there are investors and they use true criteria, they assess risks that are being characterized with the growth outlook, the trajectory of public spending, the evolution of tax revenues, and the evolution of French rating systems, and then remuneration. being given when the insurance process is being done. When these elements are consistent, you have some assets. So 3.60 remuneration in the Eurozone is good. But of course, you have to consider the debt rate. When it is above inflation, there's a remuneration for the investors. But you need to compare all that with relative figures with Germany and Italy. And a sovereign issuer such as France can get some resources from tax revenues, from households, from tourists, from businesses, from companies. And there might be some constraints, but these are opportunities for investors. What do you mean by that? There is no risk because we know that the state, can fund the process with taxes. So what is debatable is the use of public debt. What do we do with public debt? So what is at stake is the debt can be used to finance current expenses. So the market takes that into account. So there is some tension. So the investors want to get a higher remuneration rate. So rates are being attained. So how can that be better used? So France has some assets. So lots of entrepreneurs, leaders in some sectors, in the pharmaceutical industry, in the luxury industry, in the finance industry, and you have to consider the level of savings. In France, the level of savings is quite high, and French people are the champions of savings, but not the champions of assets, because assets 6,500 billion, and they are in deposit accounts, so it could be a bank credit. But in terms of performance and regarding long products, there's an issue of profitability for the individual investors. And you have to consider the intermediaries. They can reallocate savings towards long products. So there are some risks that are higher. You have to consider the cash process, and savings should be allocated to productive assets in order to create the conditions for future growth and productivity. Thank you, Benoit. Questions from the floor? So we have lots of men on the podium, so maybe a lady could ask a question.
Good morning.
Good morning. Is
Okay.
related.
The mic is working?
I hope so.
I'm not sure. Yes, it is.
Thank you. So my question is, we talked a lot about sovereign debt, and the question is, what percentage of the toxic debt you mentioned in your conversations is actually properly priced? What is the pricing mechanism of the toxic debt? And secondly, what is the regulator, the macro regulator, doing to advise on the risk of these toxic debts that influence the sovereign debt? Thank you.
Qui est-ce qui veut répondre à cette question?
Who would like to answer?
Et est-ce que le régulateur fait...
Is that well priced, and does the regulator do the right things? Our friends for IMF could talk about public debt. So what is the percentage of debt is well priced? So in an open and competitive market, all debts are well priced, commensurate with the risks that you take. So when you found a housing credit or a loan with few risks, you will get 350. And when you found a company with an LBO, and for this LBO there could be a risk in terms of a market, reversal of a market, it could be 5, 6, 8, 10, 15%. In a competitive and open market, I will say that all the debts are properly priced. What about the public debts or state debts? Are they well priced? I will ask Christian to answer.
I think for advanced countries, including all of the European countries, the existing stock of debt really is priced by the market. So it's very difficult to second guess the pricing. Of course, the pricing changes. I think the question is about toxic or bad debt is really more about what are good choices for the public sector to make going forward. So, for example, current spending will be less productive than investment spending. So really it is about making smart choices to keep public finances sustainable and to ensure that the pricing of public debt remains relatively affordable.
Thank you. Une autre question? Je regarde s'il n'y a pas une...
Any other question? Maybe a lady?
Il y a des jeunes devant.
We have young people who can ask a question in the front rows. My question for Mr. Magdalene, you talked about an investment business plan for 2032. How could it be financed? With what type of money? Do you think that the government is able to fund such a business plan? Because voting a budget in France is an extremely complex affair. Any other question? Any other question? Any other questions along those lines? Good morning to all of you. I set up my company and I used the LBO strategy, and today what is at stake today is the time spent on red tape. How can we explain to a government that to develop employment, it's important to streamline? When you look at the rules that we have lots of rules, and I think that with the digital technologies there is more red tape. So how can we sort out this situation so we spend less time with our customers, less time with our employees, and we are really busy with the red tape? Any other question? A question for Mr. Magdalene again. So 2 billion euros that were not invested because of rule imposed by the Americans. So these 2 billion euros haven't been invested. So where are those 2 billion euros? Any other question in the room? No? There's a second question here. A more general question. Isn't it a problem of culture, financial education? So we have lots of young people. What is important is to understand what debt is all about. This is about budget management or management of a P&L for the businesses. In a more general fashion, I mean, this has to do with the behavior of a civil society. So do we explain to people what debt is all about and the issues of debt? So basically, we talk about savings, but debt has to do with savings. So you're extolling savings and criticizing debt. So Serge, I'll try to be brief. Regarding the French business plan for 2032. A business plan doesn't boil down to a funding mechanism. It's a full-fledged strategy. Where do we want to be in 2032? In which strategic sectors France wants to be a global and world and European leader? So we need to define the trajectory for 2032. This is the start of a business plan. Second part of a business plan. How are we going to invest? What are we going to give up? So how do you assign and appropriate the investments, and how do we fund all that with public money? Yes. With private money? Yes, potentially. And I will answer the second question. Regarding the investment plan, it's huge. So the question is momentous. Everybody should be involved, but the state cannot do everything in terms of investment plans, because people who will implement the investment strategies are the big companies. They have lots of subcontractors and they will make those investments. But we need to rely on these two dimensions. We'll be able to calibrate the right investments. All the big companies are involved in the different sectors that you've mentioned, especially the strategic sectors with the cohort of companies, they will be able to invest, and they have lots of subcontractors, and they take on board a whole sector. This is absolutely crucial. And this has to do with training. We have to make sure that the students, the school children, the apprentices have a better knowledge of these issues in order to take up those challenges, especially when they work with companies. So if you look at Basel II, you have 2,000 billion in the balance sheet of the banks, and will have to use them as equity, and they will have to be invested in treasury bonds in order to finance the past, instead of investing in credits to fund the infrastructures and decarbonization. We'll have to keep them in order to finance the past. So I was a former central governor, so Basel IV doesn't exist. What does exist is Basel III. Over the past 20 years, all the crises that we faced before COVID came from financial problems. The financial sector has compounded some crises since COVID, and with the war in Ukraine and with the war in Iran, the financial sector was a shock absorber. Some efforts were implemented after the major financial crises. There were some cushions, and the financial sector turned out to be more resilient and was able to support the companies. So we shouldn't forget the role of cautionary regulation in the economy. Bertrand, you wanted to talk about bureaucracy or red tape. I think that you're right regarding red tape. Allow me to deliver a positive sign for Europe. I think that in Europe things are changing, even though it is a slow process, but I can tell you that there's genuine awareness-raising process. I will be talking about the nuclear industry. It's not about regulation, but it's about sovereignty. It's about Europe as well. So today we can feel that there's a European position. Mrs. von der Leyen has taken an official stance. She said that there were some errors that were made in the past. You have to consider geopolitics as well. So we need to be trustful. We have young people, so trust should be maintained. We have entrepreneurs. We have some constraints, but we have entrepreneurs. Things are changing. I mean, the boundaries are changing. Benoit, you wanted to talk about financial literacy. So I do agree with you regarding financial education, financial literacy. I mean, to make sure that savings of French people are being earmarked to the real economy. So French people are on the international average regarding savings. So what is important is financial education. You have to consider the role of intermediaries as well. So I think that the financial industry should use digital technologies in order to invest in long-term products. I will ask Olivier Garnier to summarize this panel discussion. I won't deliver a summary of this round table, but allow me to pick up a couple of points. So Patricia said, debt is toxic when it funds the past, and it is useful when it finances the future. And there's an issue. This is what I said at the start. Debt, when it increases, states will be debt-strapped in order to pay for the past. So a useful debt, I mean, will fund the past. And the budget policy shouldn't do everything. It's important to look at the denominator, debt, GDP ratio, the role of the private sector, and the reforms, the policy regarding standards. So thanks a lot to all of you. Thanks a lot for attending this panel discussion that was very fruitful. Thank you.